Hello and welcome. Today is the completion of the 7th day of July 2020. My name is Derek. This is the Money Charts channel. All bets, trades, and of the like, that's always within each's own risk and their own reward. And for myself, risk-reward management is always job number one. Let's start off within a time frame I don't usually talk or show too much, which is the triple day. And really it's just something in between the day and the week. And the reason why it's there is because when I'm going from shorter to longer term, I just want a little bit, like 3, 4, 5 times. And 7 times is what it is from daily to weekly. So 1 minute to 4, that's a 4 times differential. 4 times from this one to this one, almost. 4 in this one, this is a 3 hour here. 3 hour to 8, that's 2 and change. That's why I got the 8 is because there. And then the 8 to the daily, 3 time difference, 3 time difference. And 3 to the week, that's 2 and a third, I think, and then week to the month is a 4 and change. So it gives you go back and forth for each one that way. But as this goes, I got Fibonacci lines, and it represents levels from this high and this low. And what a phenomenal move it was. Non-stop move, really, from April of 2019, ending at the end of June, so almost 3 months, as it bypassed the first Fibonacci level with ease. And with more ease, it bypassed the second one. And with ease again, it passed through this one, but it passed through that one with ease. It resisted the next one, and then it supported the next little bit. And since then, well, this level of support at 9,814 has been resistance, being such last October. After breaking down in here, establishing this level of support, both between 7,700 and then once again the failed breakdown at 74.20, but this was a failed breakout as it managed to progress lower and such. So test number 2 occurring at the start of the year, February, before the current incident coming into place. And then the major V-shape-ish formation on the place, and this has now been set number 3, but this one has been staying and holding above these levels longer than it did before, and it's finding more resistance tests. For this one, pretty much just came up for one day and a little, one on the one period, and then a little bit through the next. So one triple day, however you want to look at it, or for one 72-hour session. And then this one for a little bit more, but then as it rejected it, it almost came back to it, but it was short, sweet, and not even close to its level. Then the big Rudy Gobert, I call the Rudy Gobert lows, and this was the one date on March the 10th when everything went down. On the same day, Bitcoin, gold, and the stock market all capitulated on an intraday level capitulation. And then, of course, the recovery in here, we come up to this resistance point in May the 6th. We've pretty much been there for a month. And throughout this time, it has been holding and staying. So what we have not been seeing with Bitcoin is a lot of things. We have not seen it break out and even attempt for it to break out, because we need this thing to come up and what would look like we have a test number 1 here of this level, test number 2 in here. You kind of really want to count that as 3, but you have test number 3 in this section. And this 3 was a long test, as there was a lot of periods showing strength amongst the 18 average of highs, but then it's been in a downtrend, but it really hasn't broken down either, because what levels of support have been established? And the answer is, well, the first one was done so here on May the 10th. 8,100 and change. On the next day, it retested that level. So 2 days at around 81. It hasn't been retested from that point. Establishing again a couple of areas. So we have a low on this period of 8,800. And then a couple days later, it goes to 86 and change, basically 87. So 87 to 88 became established. It was retested here. It has been nothing but retesting just that area. Thus, we haven't went down to 86. It hasn't went down to 81. Those would be levels I'd be looking for support if this breaks down. Has this been showing any signs of breaking down? I guess the key word on has is yes, it has. But to what degree? For the second last time I should state, we were at the level of resistance here at 98.14 was June the 10th. And then it had a decent sized decline and really wasn't able to get much of a rally going. So the highest prices weren't able to go high. which thus made the 18 average of highs start to decline. But we had this breakout here on the 22nd. It failed. There was a pause day after it. That can be both bullish and bearish, and we can see the bearish situation on it. And then it continued to show weakness amongst the lows. Thus, now we have a declining 18 average of lows and highs. You call that a downtrend. But to what degree? It hasn't broken support. It's at a minute rate of descent. Or a small rate of descent. I guess same thing. You understand. And the breakouts from this never happened because all these established levels of support have been holding. And in order for this to have any type of decline, a decent rate of descent, well, obviously got to break support, and that's going to happen. So that wasn't going on. So the fact that it's been holding, and the fact that we had this rally on this couple days ago, well, that tells us that, well, at least now, this down move is at least flattened out. And that's what it has. It's flattened out. 18 average of lows, barely starting to rise, but keyword is barely. And in order for the 18 average of lows to steadily rise, well, obviously it's got to break above this and go higher. But we have yet another possible attempt, just like there was an attempt here on June the 22nd. And will it succeed? Maybe. Long term, of course, I'm counting that there's a decent chance, and I'll get to it when we go to the long-term time frame, that this thing will break significantly higher. Within the journey to get there, I don't know if we're going to go down and have another retest of these lows and maybe go down below 8,000, or maybe we break this soon or quick and we go past 10, 12, 14, or maybe we just keep on going in this range of between 9 and 10,000, or even better yet, 9,000 and 9 and 10. And then we just keep doing that for a while. We'll see. But as it's going right now, it's telling me that it's done this. If it holds and stays in this area, finds support near 91, high change 92, that this is going to bring some nice, interesting setups. And then if that's the case, you see it start to break out. Well, yeah, now we can see gains. But of course, within this, it's just taking us to the range. And it's got to break this upper end resistance that it's established, this big Fibonacci point, before we can say, I can say myself anyway, that I'm very confident that on the short term, mid-term, and all of these time frames, that these Bitcoin prices are probably going to be going off for fantastic moves to the upside. But I can't say that until that's the case. Let's take a look at this short term, then we'll go long term. And we'll start with a 3 hour on the shorter term, which, I mean, I don't know why this always happens, or I can't say always, but it just seems to always happen. Failed move before the move. As we can see in here, that these level of support that it established in here, especially because it announced within this move in here from selling up from this high, that this is that the bearers are in serious business here. So they come down, they establish the support or retest in towards here. And then we come up to this newly declining 18 lows, showing all of this weakness in here. But it's still got to break this support to retest this. Doesn't do that. Oh, we got this green candle that comes up. Okay, that's changing. This is a downtrend. Okay, how are we going to hold this? I talk all the time about, now we got to hold this move. So where's the must hold area? Right here. It didn't hold it. And what happened is we get into this period here, and it's telling us that this is a bearish setup. And if you start to see these declines, watch out. Well, this is why big time it's a failed breakdown. Because it was telling you in the statement that most likely the price was supposed to have a correction and test just some of these areas down here, basically. But that wasn't the case. Instead, we have the breakout of this move in here. So now we're in retracement mode to here. First test of resistances would be this one in point. But what did we do at that level of resistance? Okay, so now, things are changing here. And this is following this. Now this level area of resistance, well, it got by it, but it didn't exceed it too much, but it's been holding it, and it's still doing that. It's doing it with microscopic volatility now, but it's still holding in there very, very well. I know this level of next resistance is the next point. So if you can get by this, I would expect a concise move to this next point. Now, it might along the way, short term, find resistance here, do something, whatever, maybe come back in here, then go there. Those are possibilities. But on the trend, it usually is a concise move towards those previous levels. Among such, on the single hour, we can see that, well, the original, and even on the short term, we can see this original established level of support has practically been resisting. This established support has been undercut and retested for a second time. And the momentum that it's had is over. A little bit of grinding extra losses, but almost a certainty now with this level. If we see weakness below the lows, right now it's just staying within this, so it's just yada yada, wait for this to make its move. It's pretty much declining, but you know what? It's declining barely. It's coming from an uptrend, and this is so neutral. And you start to see it holding and staying above this level. Those are good signs, but sometimes you're waiting for it to hold. It might just keep on skyrocketing. Those are the two common things that you can see again on it. And then all the time, just see, for me at least, when it breaks above the 18 average of highs, that's that statement. So if it comes back in, that's where we get that failed move. So there's a situation in here and failing, coming back into the band in here and not resisting this, rather, this setup in here. Does it surprise you? We have a big green candle in this follow through after this, because this is what I like to state, showing strength amongst the 18 average of highs. And when it broke that resistance, how do you do, basically? Okay, that's enough of short term. Let's go to long term. So let's take this to the weekly chart. And we're looking at, this is the last few years. So you can almost say sideways consolidation, or I can pretty much say that anyway. From the point it was breaking out July 31st. When I do ranges, I like to do the first time it was making it towards these levels, and of course, it's pull back and stay within. But this was just a monstrously huge move, and it's been doing really, really well as far as, well, it hasn't given much back when you, of course, you look at it from this perspective. It's a straight up line like this and really sideways. That's why I call it a sideways range. It was a retest of this level with the Rudy Goberts with a very noticeable pierce above, or we came back and we supported this previous level of resistance, and very quickly, albeit, but that's the area in which it went. And what a situation it was for Bitcoin, because I've been doing these videos during this whole run, covering this up run, then the correctionary phase, which established this level of support and thus a descending triangle. And I remember talking about these microscopic moves, and I stated, hey, breaking down below this 3,000 is the next test. And well, sort of, it was a little pierce above, which meant for myself, I couldn't get the greatest of buybacks in here, but I still did okay. But it did just that. And then this little period in here, it's like, is this the end of Bitcoin? But if Bitcoin's for real, you're just, as I was stating, well, we have this low. We had to come back down to some point. So we have established this higher low from this point. And then, of course, that concise, amazing one seasonal move, we'll say 3 months, which has been doing nothing but correcting this in this sideways range with what has so far been a failed breakdown there. And as it goes, showing strength at the 18 average of highs, but not breaking out, not breaking down. Within the monthly chart, we'll play this within where it is. When it's rising above the 18 average of highs like this, then you're in a full, concise, amazing bull market. Well, amazing if it's amazing for you, of course, but in a bull market. And it is until it isn't, and it's got to fail its correctionary phase. So in here, it had a small correction or phase and even in here, when it comes and touches these lines, and then it was able to succeed within it. And then it touches the lines again here. But this is where it needs to get above the highs to break it. It almost does here, but no. And then it's showing, oh man, it's been a long time. There's been many periods from this high. We got point A low to point B. Are we going to have to do a correction? Well, the answer to a retracement is yes, and the answer to where was here. Of course, at the time, you may not have known it was there because, okay, key leg here, the new retest, new one is here, and then now, how do we react after this fact? Are we going to resist where we came from and go down? The answer to that would have been no. So you enter back into this 18 average band in here, and instead of resisting it, so now you're making the statement that you want to reverse the trend, and you're above the 18 average into retracement mode from this level, but along the way, every single time, it stays bullish. Correctionary move here, and really, technically, never again. I mean, this was close. It just kept on going high. So as it breaks down here, obviously this is a failed breakdown right now. It goes back into the correction mode. Now it's attempting to regain the trend because it gets above the 18 average of highs, meanwhile below previous high. And of course it doesn't go up any further, and it stays within this, so it's a complete correctionary move, a little bit above, a little bit below. Now it's yet move sideways. The next move is either up or down. And they've happened both. And now we can use I like to use the 18 to help determine. And this one made a statement that it was attempting to do it. I mean, it still has to break it. All it needs, when it's at this point in here, it has to do a lot of work to break the trend, because it has to go down below this to break neutrality. And it barely even tested it, but it did. And the same thing for the highs. And it's got to break this, but it still has to break this to get this into a full-fledged, nice, amazing bull market setup, which again, why this would be the next key level resistance. More times than not, these trends usually resolve. Neutrality trends, this is indecision trends, within the path of least resistance, the current trend, which of course is bullish. So the probability odds to me state that the likely event of a significant break either out of the range on the low or the high side, 3,000 or 20,000, is that to the upside as the more probable event. And the fundamentals to the story of what's going on in the world to each one means, unless it's a failed breakdown below, and you can't rule that out. I still don't think that's the case though. Failed break is something like that happening. But going down here pretty much means, okay, it's probably going to be the end of the cryptocurrency, at least the Bitcoin one at least. And the good days were over, and it's more, and people talk about this like a tulip bubble. But on the contrary, breaking above these highs, that means next leg higher. Now we could still have this, do the whole tulip bubble thing, but it could be point A low, point B high, key low, key high, key low. Then we go up to 100 something, key high, and that might be the last one or the second last one on this run up. And then it just becomes blah, nothing. I don't know if it will or not, but for me, I'm going to protect my profits along the way. And if it ends up going to nothing afterwards and I get a leg higher, I'm going to be in fantastic situation for what I'll protect. And I'm already in fantastic for what I've already protected. And that's how I'll keep going on within it. Because for myself, if I can only put one thing in a safe, and the rules are for whatever hypothetical, not stupid, but notable hypothetical situation, you cannot unlock that safe for a noted period of time, 2 years, even, definitely 2, but more importantly, 5 or 10 years. I can put Bitcoin, gold and silver, and fiat currency in that safe. The gold and silver was the actual metals. Just put them in the safe like you normally do, lock it up, and 10 years from now, if that's the time I use, if I put, say, however many ounces in, they'll be there. I can put my cash, put those $100 bills and just throw them in the safe, and those bills will still be there when I open them up. And cryptocurrencies, I can have my private keys and all the things that I need for that. Then I'll go check my cryptocurrencies. If, say, I had a couple Bitcoin that I threw in there or had in there, I check it up. Those 2 Bitcoin would still be there. However, what would the value of each of those 3 things be? Which makes it a very interesting answer for me. For fiat currencies, slim chance in hell, I believe, that it's not only going to, that will be positive, meaning like no chance that it's going to gain in value, but almost no chance it's even going to hold its value. And at best, it's going to be like the last 10 years, and you're just going to see a little bit of inflation in all different items, and it's going to lose its value. And of course, the chances of having losing pretty much all to the vast majority of it is most certainly in play. And then we look at gold and silver. And to me, those are I like to say, I'm not going to say they'd be guaranteed for you, but for me, I say it's guaranteed for me. So it's just the whole, like, the obvious reason why when you make these videos and you put this stuff in, you're not going to Joe Namath it and guarantee something's going to happen. At least I'm not. I'm not going to say that, but I pretty much kind of am. I'm saying it to myself. I guarantee to myself that this thing is going to hold its value at a reasonable level at worst. Meaning, like, example, if you hold your fiat currency, like I say, best case scenario, maybe you lose 20, 30%, which to me or whatever, that's almost like worst case scenario with the gold and silver that you end up doing that, especially when you're not buying it when the prices are highly overextended, or aka 2011 when it was north of 30. And then the chances that it has great value and an extra value, I think, is big. But Bitcoin brings you an extra wild card factor, because I could easily see how it's worth absolutely nothing or close to it in 10 years. And at the same time, I can see how the value you get is X folds much, much larger, especially when it's not Bitcoin. You're talking about some of these other altcoins that can have higher risk and higher reward. Ones that can have extra fold gains, and and there's a chance with the altcoins, well, maybe you have an altcoin in there that goes to zero or close to it, but Bitcoin doesn't. That's another way of me putting that into play. But you put in like a Tezos or something like that, which goes up like 60, 80, 100, whatever fold over that decade. Some sort of sick amount, because a lot of them will do that. It's almost like taking some of the really old coins from way back when well, even Bitcoin, for example. That's a perfect example. You put Bitcoin back in a safe back here when it was $5. Say you had $5,000, where you had 1,000 of them. Oh, what's 1,000 times 10,000? A lot of money. Anyway, thank you for tuning in, and have yourself a great day. Bye-bye.